our leadership position in the LCV radial category. Our mobility solution business, selling miles, a high growth segment, has crossed rupees 100 crore mark in FY24. Our journey of launching innovative and high performance product continues across all segments, including tires for EV. Talking about the FY24 performance, revenue crossed 15,000 crore mark with 3 times growth in the net profit enabled by operating leverages, better product mix and favorable input costs. Operating margin improved by more than 500 basic points to 14.1% over FY23, resulting in EBITDA of the year at rupees 2,122 crores, the ever highest. Our balance sheet has further strengthened by deleveraging measures and equity rise by the way of QIP, which received an overwhelming response from market investors, reinforcing confidence in our growth story. We remain committed to continuously deleverage the balance sheet. The net debt at the end of the year stood at rupees 3,704 crores, lower by 18% as compared to March 2023. There has been a significant improvement in the generation of free cash flows and return ratio touching its high teens during FY24. Coming to Q4FY24 performance, overall the revenue was recorded at 3,714 crores. EBITDA margins were recorded at 13.4%, registered a growth of 26% on year-on-year basis, reaping the benefits of product premiumization and efficiency improvements. Pursuant to the regulations of the government with respect to the notification on extended producer responsibility (EPR) for the tire industry, we have made a provision of rupees 106 crores pertaining to FY23 and FY24 in Q4. In FY25, we have started recovering the EPR cost from the customers. Automotive sales in India continue to witness buoyancy in fiscal year 2024. Passenger vehicle segment recorded a high single-digit growth with a yearly volume crossing 4 million mark, supported by strong growth in SUV sales and growing sales of alternate fuel powertrains. Commercial vehicle sales started with a positive trend in FY24, fueled by government's infrastructure initiatives, expansion in core industries and sustained growth in e-commerce. As evident through high-frequency indicators such as GST collection, e-way bills and positive PMI. Though the demand momentum has moderated in the second half due to elections in the country, but the same is likely to pick up pace after the new government takes charge and infrastructure projects implementation work resumes. On the full year basis, JK Tyre has clocked a domestic volume growth of 6%, contributed by replacement and OEM segment, which grew by 7% and 5% respectively over the last year. However, export volumes are flat despite geopolitical disturbance and supply chain disturbance on account of the Red Sea crisis. In the fourth quarter, we witnessed a volume growth of 7% in the replacement segment. However, the OEM volumes were muted, mainly owing to lower CV offtake. The export grew at a healthy rate of 43%. On the tire sector outlook, we remain optimistic in the medium to long term with passenger and 2-3-wheeler tires to remain buoyant through the year. The replacement demand for CV tires is stable. However, demand from the OEM is expected to pick up pace in the second half of the fiscal. On export, demand has started recovering since the last quarter of FY24 and is likely to sustain going forward. On the channel development during the year, we have further strengthened our market presence in the replacement segment by adding 130 plus brand shops, 200 plus fleet customers and large accounts were added in the mobility business. The ongoing capacity expansion projects for the TBR and PCR are nearly completion and in full production will be achieved by Q1 FY25. Further, earlier announced capacity expansion program in TBR, PCR and all steel truck radial tires are an aggregated cost of rupees 1400 crores are under implementation and progressing well according to plan. We continue to deliver a strong performance across all ESG pillars. We are committed to become an environmentally responsible organization focused on sustainable energy. Our usage of biomass as an alternative fuel has reached to a level of 38%, which is reaping us benefits and underscoring our commitment. Today we have achieved renewable energy consumption of 40%. We are among the top 3 manufacturers globally for the lowest energy and raw water consumption. With clear goal, we are progressing towards our mission of reducing carbon intensity to 50% by 2030. With immense pride, I would like to share that our Chairman and Managing Director, Dr. Raghupati Singhania ji, was featured as a mega icon at the National Geographic Channel, honoring his journey of dedication, determination and strong leadership to have nurtured JK Tyre to new heights. Now I would request Bajoria ji to talk about the performance of Tornel Mexico.
Thank you very much, Indy sir. In financial year 24, JK Tornel Mexico financial performance remained stable during the year despite increased competition from Chinese tires and currency appreciation impacting exports. The economic situation in Mexico is buoyant, owing to increased FDI and tapering inflation. JK Tornel achieved revenues of about 5,500 million pesos, equivalent to rupees 2,628 crores. Operating profit at EBITDA level remains similar at 447 million pesos, equivalent to rupees 212 crores. For the quarter, JK Tornel Mexico registered sales of 1251 million pesos, equivalent to rupees 612 crores, lower by about 9% on year-on-year basis. Profitability at EBITDA level stood at 96 million pesos, equivalent to rupees 47 crores, up by 10% on year-on-year basis due to better product mix, further supported by input costs. JK Tornel is continuously expanding the sales channel through new dealers' appointment and enhancing sales network in USA. It is also pursuing launch of new sizes in radial tire segment to bolster presence in US markets. With these measures, we expect to scale higher revenues and better profitability in the financial year 25. Now I request Mr. Sanjeev Agarwal to brief about the financial performance of the quarter.
Thank you very much, sir. So as far as the key highlights for FY24 and Q4, Q4 financials are concerned, I will tell you. The consolidated revenues for FY24 were recorded at rupees 15,046 crore, which were up by 2.5% as compared to rupees 14,681 crore in FY23. Consolidated revenues for Q4 were recorded at rupees 3,714 crore as compared to 3,645 crore in Q4 FY23, which is up by 2%, marginally up by 2%. Profitability at EBITDA level was recorded at rupees 2,122 crore as against rupees 1,334 crore in FY23, registering a growth of 59% on YOY basis. And for the quarter, the EBITDA was recorded at rupees 497 crore as against rupees 389 crore in the corresponding period, which is a growth of about 28%. EBITDA margins improved significantly by 500 basis points to 14.1% in financial year 24 as compared to 9.1% last year. EBITDA margins during the quarter were recorded at 13.4% as against 10.7% in the corresponding quarter. On full year basis, cash profits almost doubled to rupees 1,675 crore as compared to rupees 879 crore in FY23. During the quarter, we have made provision for rupees 74 crore in JK Tyre and rupees 32 crore in FIL towards the EPR liability, which was regulated, which was notified by the Government of India, and this liability was provided in Q4. For FY24, the profit after tax increased to rupees 811 crore, which is 3 times of the profits which we registered last year at rupees 265 crore. Consolidated capacity utilization was about 89% in Q4, which was 86% for the full year. Consolidated exports stood at rupees 663 crore, up by 39%. Subsidiary companies, Cavendish Industries Limited and JK Tornel Mexico, continue to perform well and have significantly contributed to the revenue and profitability on consolidated basis. Cavendish Industries Limited posted a top line of rupees 3,665 crore with EBITDA of rupees 513 crore, registering an operating margin of 14%, and the profit after tax stood at rupees 156 crore in FY24 as against rupees 9 crore in the corresponding period. Revenue for the quarter stood at rupees 873 crore. EBITDA stood at rupees 108 crore as compared to 112 crore in Q4 of FY23. And profit after tax stood at rupees 19 crore for Q4 FY24. Earnings per share on consolidated basis improved to rupees 29.84 per share in FY24 as against 10 rupees 10.64 per share in FY23. Return ratios have improved significantly. ROCE and ROE are in the high teens level. Net debt stood at rupees 3,704 crore as on 31st of March 24, which is 18% lower as compared to the previous year. And the leverage ratios improved significantly again. Net debt to equity improved to 0.8x to 1 in FY24 as against 1.29 in FY23, and net debt to EBITDA improved to 1.75 as against 3.39 as at the end of March 23. The board had recommended a dividend of 225%, including an interim dividend of 100%. In addition to an interim dividend of 1 rupee already paid, 50%. Further, I am happy to share that our Managing Director, Mr. Anshuman Singhania, was named as one of the top 10 innovative CEOs in 2024 by Business Success Stories. The balance sheet of the company is much healthier now with improved financial ratios, and we have already circulated our earnings presentation, which is available on our website as well as on stock exchange website. And now we are open to the forum for the question and answers. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Bharat Bhagnani from Living Root Analytics. Please go ahead.
Yeah, hi everybody. So my first question is with regard to...
Mr. Bharat, this is the operator here. I request you to kindly go off the handset. Please come closer to the microphone and go off speakerphone.
Yeah, can you hear me?
Yeah, this is loud and clear.
Yeah, so my first question is with regard to the tax rate in FY24-25. So, Sanjay, what tax rate are we going to target this year, current financial year?
So this will be 25%. We will be moving into the new tax regime in JK Tyre from 1st of April 24.
So including Cavendish, right?
In Cavendish, the new regime is already applicable, so which we had adopted earlier. So we will be, in both the companies, will be under 25% tax regime.
Okay. And you mentioned the net debt movement, amount, but can you tell me the gross debt movement and how much was repaid during the year? And how much is scheduled for repayment in the current financial year?
Yeah, I will definitely. So the gross debt was about 4,800 crore last year, and we have paid almost about 360 crore this year, and this has come down to 4,450 crore, approximately.
And current year also similar amount will be repayable?
Yes, 350 crore plus amount is repayable in this financial year 25.
Okay. Anshumanji, I just had a question regarding the sales growth in the current year. You know that we managed to just do around 2 to 3% worth of sales growth. This is including some amount of pricing growth as well. So, I mean, have we lost out on volumes in terms of volume growth?
No, on a year-on-year basis, on a console basis, we have a growth of 3%, and volume growth was 4%. So we have definitely not lost on the volume growth. In fact, we have really inched up on all the categories in terms of our volume growth.
Okay, so pricing has remained the same. And so this year, what kind of growth are we targeting this year in terms of sales, now that we have additional capacities also?
So we are targeting 8 to 10%.
This is including volume and pricing both?
This is including volume.
And this is 8 to 10%, which will include volume and price. And the industry is sort of expected to grow at about 6%.
Okay. And so in the light of recent our key raw materials like rubber and even crude being volatile, but rubber actually having increased to what it is right now, about 182 per kg odd. So do you see that impacting margins for this year and next year? In an environment where we may not be able to increase the prices of the products?
No. You see that the average raw material basket has remained flat on a Q and Q basis, and we are expecting the basket to rise about 3 to 4% in Q1. So we are not looking at a margin impact.
Which means you will pass on the price.
We are looking at taking a price increase in the range of 1.5 to 2% across categories in Q and Q1. And rest, we are looking at bettering our premiumization, the mix, and operating efficiency.
So have we taken any price hike yet?
Yeah, we have. We have taken around the range of about 1.5 to 2%.
Okay. In which category, sir? In which Tyre category, or is this across?
Across the category.
Okay. Thank you, sir. Thanks.
Thank you.
Thank you. We have the next question on the line of Mumkesh Mandalesha from Anand Rathi. Please go ahead.
Yeah. Thank you, sir, for the opportunity. And congratulations.
Mr. Mandalesha, your audio is not very clear. If you could go off the speakerphone and come closer to the microphone.
Better? No?
Yes. Can you speak a little more closer to the mic?
Yeah. Well, thank you so much, sir, for the opportunity, sir. And congratulations on the good results and on the chairman video and the MD award, sir. In terms of distribution, sir, how do you see the expansion of the current 750 plus brand stores and the reach of 1,300 fleet operators expansion ahead, as that is driving the outperformance over the industry for the company? Also, what would be the volumes coming from the brand store currently? And in terms of profitability, how it will be differing from the normal channel?
Yeah, Anuji, would you like to?
Yeah, so regarding the brand shops, especially the steel wheels and the truck wheels, we expanded the brand shops by almost 150 brand shops were added, and now they are close to 800 plus brand shops we have. So this is in PCR segment, almost 50% of our sales are now coming through the brand shops, and it also helps us to get better connect with the customers. We are offering the entire solutions on this. Plus, what we intend to add roughly around 200 plus brand shops in the FY25, and we expect that this will further help us to better our connect, and also these brand shops being exclusive to us are definitely going to improve our brand salience and brand image. So we are working towards this. So that was the one question. What was the other question that you had?
In terms of fleet operators, sir, how that changing next year?
Fleet operators. Yeah, so our engagement with the fleet operators is improving year on year. In fact, this year also we have added some of the marquee fleets to our account. Not only about fleet, but also we are talking about the mobility solutions where we sell miles. There again we are adding some very good large accounts. So if you take the whole country, larger than 100 trucks fleets would be around 1800 plus fleets, and we are connected with almost 1300 out of the 1800 fleets. So we expect that further consolidation of fleets is likely to happen, and therefore that is a definite advantage for us as a company.
Okay. And how would be the profitability of the brand store, sir? Would it be different from the normal channel, or it's a similar margin profile for the sales we get from the brand store?
So brand stores are definitely better on profitability because they are able to make a value sales pitch to the customers, and they are also providing services, which is also a revenue stream for them. So overall, I think so. The brand shops who are doing a consistent volume, depending on the size of the store, anywhere between 200 to as high as 2,000 tires also. So those brand shops are definitely more profitable.
Got it, sir. Thank you. This question to Sanjeev, sir. In Q4, sir, what was the price hike taken? Any marginal price increases taken in Q4 quarter, sir?
So as Anshumanji just mentioned, there was some price hike which was taken in Q4, and but that is very marginal increase. And but major price increase was taken again in Q1 of FY25. So there was not much of a price increase, but yes, marginal price increase across segments were taken on select SKU basis.
Okay. Thank you. Sir, continue on this part. Considering the further cost inflation, how much further price hike we will require to take to pass on the impact, also the EPR impact, and any thought by when that price hike would come, sir?
7%.
You are asking for the year as a whole or for the quarter one?
So I mean, there would be in Q1 there would be some inflation impact on the gross margin, and maybe there was further addition in Q2 also. So on total, how much further price hike we require to pass on the impact?
So very broadly, Arnulji definitely will be better in a position to tell you better. But very broadly, we will be passing on any increase in the raw material price impact to the customer. But we are seeing that there is not much of a price increase likely on raw material in the entire financial year.
I would say that, as I said, that on a quarter-on-quarter basis, right now there was a flat increase in raw material, but we are expecting that in the quarter one of FY25, 3 to 4% increase. So there we have already increased our price to 1.5 to 2% on the finished goods across the category for quarter one, and we will be governed by the competitive prices as it plays out for the rest of the quarter. The other thing which you, I think, asked was the EPR. So we have already started charging per tire basis on the invoice to the customers. So this will be a recovery or a charge to the customers which we are going to recover.
So that would cover all the impact for EPR for next year, right, sir?
Yes.
Yeah, it would. And this will get calibrated depending on what is the cost of the certificates that we will be purchasing. So this will be a pass-through cost.
Got it. And sir, is this phenomena across the industry we are seeing, or this is something JK has initiated in terms of pass-through the cost?
On the EPR?
Yeah.
So there are two companies we have done, but it is applicable for across the industry.
Got it, sir. Yeah, and just lastly on the Europe, sir. Mexico. Can you share what kind of a revenue outlook for next year, sir?
As I said, that we have taken some measures, and we hope to better our revenue and also therefore our bottom line, the profitability.
Got it, sir. Thank you so much for this. Thank you.
Thank you. We have the next question from the line of Jaimin Desai from Emkay Global. Please go ahead.
Yes, thank you for the opportunity and congratulations on maintaining profitability and the expansion in return ratios. My first question is around demand outlook. you mentioned 8 to 10% growth in top line expectation for this year. Can you provide some color in terms of splitting it up in terms of volumes and pricing? Earlier, I believe you've indicated for double-digit growth in the India replacement segment. Does that expectation still hold?
So what is your voice a little? Could you just repeat your question, please, very clearly?
Yeah. Earlier we indicated double-digit growth expectation in the domestic.
Chairman, your audio is slightly muffled. If you could go off the speakerphone and come closer to the microphone.
Yeah. Is this better?
Yes.
Okay. Yeah. Sir, my question was regarding the domestic replacement demand. Earlier, we have indicated double-digit expectation from this category. Does that expectation continue to hold? Do we still expect double-digit volume growth in this segment for this year?
It will be varying from segment to segment. In PCR, definitely in the replacement market, we expect a double digit. The CV may be seeing a high single digit growth, but overall, I think so it would be somewhere between that 8 to 10%.
Understood. And also, just to check whether I've got the understanding right. So you mentioned that there were very marginal price hikes in the fourth quarter, upon which you've taken 1.5 to 2% increase already in the first quarter. And there will be some hikes going forward as well, and that would entirely cover the higher EPR liability as well as the whatever RNA cost increase has been there. Is this understanding correct, sir?
No. Actually, what you are mixing, I'll clarify. See, when we said Q4, we have taken some price increases. They were on select SKUs. That is one. In Q1, we have done two things. One is that we have taken a price increase of 1.5 to 2% on account of raw material.
Right.
Then we have also started recovering the cost of the PR side, which is based on the per kg, the EPR cost. It is on a per kg or per tire basis. So that is, whatever is the cost is being recovered.
Then this will continue. The EPR will continue as a cost recovery measure.
The other point is that further raw material price increases that are expected during the year, the efforts would be to pass it on. But as Anshumanji also clarified initially, that we will be continuing to hasten the work on premiumization, product premiumization, and our operating efficiencies. So the combination of the three, price increase, product premiumization, and operating efficiencies, all three put together, we would definitely try to offset the entire material cost.
Understood, sir. That is very clear. Thank you for the clarification. Just one final question. In this quarter, we have seen decline in the EBIT margin for Cavendish on a quarter-on-quarter basis. Is this entirely because of the EPR provisioning, or is there some other reason also?
You're talking about the operating margin reduction?
Yeah, for Cavendish on quarter-on-quarter basis.
Chairman, do you have any further questions?
No, thanks. I'll fall back in queue.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone.
Hello. The person who had asked the question on the Cavendish?
So Jamin had asked the question.
Yeah. So, just to respond, he's there on the line? Jamin?
Yes, sir. He is there.
Okay. See, one is that, yes, there was a EPR charge that came in Q4, which was not there in Q3 or any of the other quarters. There was a slight reduction also in the top line. That was mainly on account of certain OEM in the CV space, where the demand had suddenly tapered off during March.
But overall, I think so. We have been, if I take the EPR charge off, it is more or less comparative.
Understood. Thank you, sir.
And if you look at the comparison with the corresponding quarter, you will see that there is a 90 basis points improvement.
Understood. Thank you.
Thank you. Participants who wish to ask a question may press star and one on your touchtone telephone. Participants who wish to ask a question may press star and one on your touchtone telephone. We have the next question from the line of Krupa Shankar from Avendus Spark. Please go ahead.
Yeah, good evening and thank you for the opportunity. So I have two questions. Just wanted to get a sense of what would be your total capacity in India across TBR, PCR, two-wheeler, specifically in India.
So the total capacity, as we have also shown in our presentation, investor presentation, is 3.4 crore tags.
Right.
Yeah, and this is for all the companies, including Tyre in Mexico and the Cavendish and Tire. But the details are given. We kindly refer to that number. This is not readily available with me at the moment. So refer to that number in the presentation.
Okay, but India capacity would be how much out of this 3.4?
So this is again segment-wise given there, and different for different kind of tires for truck and bus and passenger and motor. So
all right, I understand. I'll refer to that. The second piece of it, just wanted to also get a sense of is there any internal estimate on what would be the market share across segments in India, across perhaps truck and bus, PCR and two-wheeler?
So this is really difficult to calculate because the data from all the companies are not easily available. So we have not been calculating the market share, but we can tell you that we are the market leaders as per the data available as per our own assessment on the TBR.
On overall commercial vehicles,
yes,
commercial vehicle tires, and also specifically on TBR in the domestic market, we are the number one.
Yeah.
Okay. And this is across OE and replacement, is what you're saying?
Total domestic.
Yeah.
Okay. Any range on what would be that number? 25-30%?
That is what you want.
I'm just curious. Just wanted to understand because internally, there are a lot of numbers floating around to just try, and that's the reason why I was telling you. Okay, thank you very much. I think
we're the market leaders, and I will put it to stop there.
Okay, all right, sir. On the outlook part of it, just wanted to quiz whether on the CV side. Are you seeing the traction on replacement picking up primarily on the sentiment, or is it more of a pricing-driven push to boost volume, sir?
Yeah, so in the CV market, we are seeing stability in the replacement market, but however, in the OEM, we are seeing some flattish trend, but we are expecting that this will also pick up by the second half of this fiscal year.
Okay, got it. That's it from my side, sir. Thank you. I'll get back to you.
Thank you.
Thank you. We have the next question from the line of Nirav Saskaria from Living Root Analytics. Please go ahead.
Yeah, hi. So you said the capacity utilization for FY24 was at 86%, and we are going to grow at 8 to 10%, which takes us to a utilization of around 90%. So why are we setting up additional capacities? Rather, we can use the amount to repay our debt, gross debt, and reduce it.
When we talk about capacity utilization, the number that we have given is an annual number. But if we go into quarter by quarter or month by month, depending on the seasonality Also, the OEM demand is not the same throughout the year. So there are months where we utilize the capacities even at a higher level. So this is not something that we can say that, you can just, rather than going for the expansion, you go for this. There is a certain headroom also that is always better to have. So overall, I think so, if any company, any organization is having a capacity utilization in excess of 90% is actually a very good number to have.
So, sir, could you give me the breakup of capacity utilization across TBR and PCR?
Yeah. The other thing is that, if I take this number that we quoted is the entire capacity utilization, but the radial capacity utilization is definitely better as compared to, because bias, as we know, the demand is muted, although in some segments it is still there. In the truck tires, still around 45% of the truck tires are in the replacement market. The demand is there for the bias. But if I take the TBR utilization, it is definitely in the 90s. And PCR is actually in excess of 95%.
And also, I would like to add, it takes about 2 years to add to capacity. Right? So only
lead time is high.
It is a time-taking process, so that is why.
We expect that the market will grow at a CAGR of 5 to 6%.
Yes.
And if we can capture more, then why not?
And so, what's our outlook on the CV cycle?
What did you say, EV or CV?
CV cycle.
Passenger vehicle. Passenger vehicle, we expect that, last year we had a good growth. This year again we expect that it will be in a high single digit industry level. For the PV vehicles you are talking, right?
This you're talking about commercial vehicle cycle, right?
Okay. Passenger vehicles.
I'm talking about commercial vehicle.
Oh, so commercial vehicle, the vehicle side, what we are getting the inputs is going to be rather flat, but overall flat, but it will be better in H2 and muted in H1.
And that will be majorly from OEM side?
Yes. Replacement, we already clarified, no? Replacement demand is holding up.
Okay. And so, sir, just one last question. Could you tell us the expected, the raw material basket prices, which is synthetic rubber, carbon black, which the company paid in Q4?
No, actually, as I said that our overall basket quarter-on-quarter was flat. We are expecting the raw material basket to increase by 3 to 4% for quarter one.
Okay, so sir, in Q1 we are expecting a 3% increase, which will be via which input?
Mostly natural rubber, followed by some small quantities of other components.
And sir, at what level of crude are we really comfortable at?
$85.
Up to 80 to 85 range.
While there is a correlation between crude and certain derivatives, but there is no direct correlation as such, and it happens at a lag.
Yeah.
So very difficult to kind of, base your decisions on that.
No, I get that. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Chirag Jain from MK Global. Please go ahead.
Hi, good evening, everyone. Sir, would you like to spend some time on the new marketing campaign that we have started, Desh Ka Tyre? And obviously, in terms of how differently we are positioning our products, the overall, let's say, the reviews that you would have received so far in terms of improving the brand perception. Obviously, this is not in isolation. We are also expanding capacity on PCR and also want to expand or increase the share of SUV tires? And overall, obviously, this would have implication in terms of a growth profile and also in terms of margin profile. So maybe some more, let's say, insights on these on this marketing campaign per se.
Yeah, thank you, Chirag. You see that last year we have been able to come out, last year combined, we've been able to come out with very innovative product lines, which is Smart Tyre and Puncture Guard, which we had an ATL presence and BTL presence all throughout in India. That was a very strong communication, plus on the digital front as well. But here, this ad, which we are very proud of, and you must have also seen, and it has become like a sort of a theme, national anthem type of a theme song for viewers and our followers. This also indicates our whole range, right from a 2-3-wheeler tire to a farm tire to LCV tires to passenger tires, right up to truck and bus tires and even off-the-road tires. So it is a holistic range ad, and as the ad depicts, it connects India to India, and from the north, south, west, all corridors. And this ad has been live now on air in all the major channels, and plus a lot of song and dance in terms of its publicity in the radio as well. So I welcome all of you to please have a look at this ad. The other part of your question was how are we increasing our sort of margin expansion, how it is helping us. In the passenger car radial, we are, as we've been always saying, that we have been increasing our premiumness, and we have been moving on the lower rim sizes to more higher rim sizes, so above 15-inch, 16-inch and 17-inch sizes. There our premiumness is coming in, and this is definitely adding profitability to our books. Similarly, also even in the truck radial, our innovative products like XF, XM and XD has also added our premiumization mix in that story. So that is also catching a lot of acceptability in the market, and we like to take this story forward.
So over the medium term, would it be fair to assume that our market share gain story or the outperformance vis-a-vis industry should continue, and even on the profitability side, irrespective of short-term commodity swings, but on a medium-term basis, there would be upward bias to our profitability, given the entire focus on premiumization?
Yeah, so this premiumization story would definitely have an insulation effect, if I can say, from the rise of the raw material, because this will sort of offset that. If I got that question right.
Yeah.
Yeah.
Okay. Thank you so much. That's it from my side. All the best for the future.
Thank you. We have the next question from the line of Nirav Sakaria from Living Root Analytics. Please go ahead.
Yeah. Hi, sir. So just a follow-up. What are we doing to increase our brand visibility? Like Fiat has partnered up with IPL. Recently, MRF has also taken Virat Kohli for an advertisement. So why don't we do something similar to increase our brand visibility by taking up any celebrity or a known personality?
Very interesting question, and but our core has been motorsports, and we have spent decades in our motorsports, and so we are doing a lot of activity around motorsports. Our cars which have Formula cars which have also recently run on Dal Lake in Srinagar was a very big event. We have also done recently in Bangalore also a Formula event. We are shortly going to be doing some more interesting events in Mumbai as well. We have also done in Arunachal Pradesh some of the rallies. Plus, we have actively also participated in two big events where women driving was also there. So, we are very actively engaged into this.
Rallies we have participated and it is, I think the last year the brand visibility is significantly better than the earlier one.
So, but just to add, one is that motorsport is the main thing. But beyond that, our social media, we have leveraged the social media presence, and this latest, what we call as the JK Anthem, is also given a lot of positive, feeling the emotional connect with many of our large customers on Hindustan, Jab Mile Hindustan Se. This campaign is also being very, 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 very well appreciated amongst our dealer channel partners, amongst the customers.
They are really encouraged by the hits.
Yeah. So I feel that we are doing the right things on the brand side.
So, but I totally get that, but motorsports is quite niche as a category. And if we get on to celebrities and famous known personality, that will skyrocket a brand advertisement, and normally public will also be able to associate with a brand in a much better manner.
You're right. You see that every company has its own philosophy of endorsements. In the past, and we continue to do that, we have endorsed a lot of racers in our brand communication. Even in our earlier ad, we have included our racers, and not only male, but we have also promoted a lot of known women rallyists in that. So the endorsement is completely with decision of the company as a policy.
Okay, sir. Thank you.
Thank you. We have the next question from the line of Arvind Kedia from MDK and Associates. Please go ahead.
Hello, ma'am. Am I audible?
Arvind, your audio is a little muffled. If you could go off the speakerphone.
Hello. Am I audible now?
Yes, this is much better.
Yeah. Sir, you mentioned about motorsport, and obviously JK Tyre has been one of the very few companies that have been promoting motorsport in India. But recently there have been rumors that MotoGP might not come back to India. And like F1 is also, we don't know, it hasn't come to India for more than 10 years. So with the declining interest in motorsport, what are your views on that? And how are you going to increase the audience's demand in that field?
You see that F1 is not the only motorsports which is the front runner, but all over the world, including in India, there are several other formats. Track race is one format where we are actively participating, but rally, off-site, hilly terrains, otherwise off-site rallies, and apart from circuit racing, there is a lot of following amongst the motor enthusiasts, and as well as people who are watching the sports. So there is a lot of fan following for this, and we are very proud that we are leading the pack in attracting the following, and we have several formats in which we are participating in our motorsports. And Women Rally is another part which is also very much at our core, and we nurture the talent there, and we are very proud to be associated with this cause.
You're leading in women.
Okay, thank you.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Hello?
Yes, sir. So can you hear us?
Yeah, now.
That was the last question.
Okay, that was the last question. Okay, thank you so much for joining us today. We hope that we have clarified all your doubts. And thank you very much once again. Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.